Hey everybody, it's Cade Bekanich with Park Lane Financial Group, and today I'm going to tell you about how I responded to the most recent call I received from a client panicking about the market. Let's get into it. When markets move, emotion gets heavy. And what I mean by that is when you see your money go up and down, even if you're comfortable with risk, it still could be a little bit stomach turning in the sense that you know your money's safe, you know the market goes up and down over time, but it still doesn't make you feel good or feel confident in your long-term plan when you see your account take a downturn. So how do I respond to clients that I know are able to tolerate the risk from both a financial perspective and an emotional perspective, but still get a little bit wavy when the market moves around? My number one step is to stay calm. In order to make good financial decisions when the market moves around, you have to stay calm. That is absolutely the most important decision you can make, because when you act with emotion, that's when poor financial decisions are made. It's important to understand what your long-term plan is, because when you make the plan initially, you know that there's going to be movement in the market. You know that investments will be volatile, but it's a matter of understanding that this volatility, this market movement is part of the long-term plan. You know that your account will go up, you know that your account will go down, and statistically over time, when you allow your account to sit, do what it's supposed to do in the first place, and don't make emotional decisions, that's when you build long-term wealth. Those are the decisions that allow us to build the wealth that we've set out to achieve in the first place. Not only am I a certified financial planner, but I consider myself to be a financial therapist, helping my clients navigate these markets and trying to avoid emotional decision making. So that sums up what my responsibility is as far as helping people to make good decisions even when scary times do arise. But how do I actually do that on a day-to-day basis? Well, first, we review the client's initial financial plan. We figure out where they started, what our initial goal set was, and what steps we've taken in between that time frame from where we began to where we are right now and where we want to move to moving forward. We have to make rational decisions, because when we make decisions that make sense according to what our overall strategy is, that's when goals are achieved, that's when wealth is built, and that's when people get excited about their money. And we can't forget that even though we put together a solid financial plan from the start, we have to be able to make adjustments because things do change. So when markets move, as there's volatility in the stock market and real estate goes up and down, people get promotions, they may lose jobs, they may lose a spouse, they may go through a divorce. Whatever it is, we have to make decisions based on your new life circumstances. And that's why with my clients, communication is absolutely necessary, and consistent communication is key to achieving these long-term goals. So when you talk about emotional decision making with market volatility and potentially pulling your investments out because you're afraid to lose more money, you have to reflect back to the first initial plan. Why did we make these decisions in the first place? Why did we choose these investments in order to pursue your long-term financial goals? And where are we actually at in your overall financial plan? Are you considering retiring in 2, 3, 4, or even 5 years that we might need to be a bit more conservative with your assets? Or are you just getting started building wealth and doing everything you possibly can to build a financial future that you desire and that you deserve? Everybody's situation is unique. Every single one of my clients has a different circumstance, and that's why we make personalized plans. That's why there's no cookie cutter solution, and that is why it's important to have consistent communication so that myself, as a certified financial planner, has a complete and total understanding of what goes on in my clients' lives. That's why when it comes to handling emotional decision making, that's why when it comes to professionally managing money despite what the market's doing, we're prepared. So in order to remain emotionally stable during these volatile markets, my responsibility is to be the concrete and the stable hand during these emotional times. Thanks for watching, and we'll see you in the next one.